Hey everyone, welcome back to Corporate Decoder, the place where we sift through mountains of corporate speak to find the real stories. And today we're looking at Trilogy Metals Inc. and a filing that signals a big shift in how they plan to raise money. Trilogy Metals Inc. is letting us know about a pretty significant financial agreement they've entered into. Think of it as a new way for them to get cash by selling their company stock. Now, usually when a company wants to sell stock, they do it all at once, maybe through a big offering. But what Trilogy Metals is doing is called an at-the-market or ATM offering. It is like having a tap that they can turn on and off to sell their shares whenever they think the price is right, as long as it is above a certain level. This new agreement, called an equity distribution agreement, is with a bunch of investment banks who will act as agents. They're the ones who will actually go out and find buyers for Trilogy Metals shares. Imagine it like this: Trilogy Metals has a certain amount of their company they're willing to sell, and these agents will help them sell it piece by piece to the public on stock exchanges, like the Nice American and the Toronto Stock Exchange. The really big number here is that they can sell shares worth up to a whopping $200 million. That is a substantial amount of money for a company. Now, they don't have to sell all of it or even any of it. This agreement gives them flexibility. They can decide to sell more shares if they need the cash. Or they can pause or stop sales altogether if the market conditions aren't favorable, or if they simply don't need the money. It is a dynamic tool for them to manage their funding needs. It is also important to note that this new agreement is replacing an older one. This tells us that Trilogy Metals Inc. is actively managing its financing strategies and evolving its approach to raising capital. They've already used up about $25 million worth of shares from a previous program, and now they're setting up for potentially a much larger amount. The core of this deal is this Trilogy Metals Inc. gives these agents the green light to sell their shares. The agents promise to try their best to sell them, and they'll get a commission for their work, which is capped at 3.0% of the money they raise. This means if they sell $100 million worth of stock, the agents could earn up to $3 million. There are also customary clauses, like the company agreeing to cover the agent's legal fees up to $200,000 to get this whole ATM program set up. Now, to keep everyone informed, Trilogy Metals Inc. also put out a press release about this. This is where they officially announce these kinds of material events to the public. It's all about making sure everyone, big investors and small, have access to the same information at the same time. This is a key part of fair and transparent markets. Interestingly, the filing also includes legal opinions from their lawyers, Blakes Castles and Graydon LLP. This is common for significant financial transactions. It essentially means their legal counsel has reviewed the deal and is providing their professional opinion that everything is in order from a legal standpoint. Now, let's put on our Warren Buffett hats. What does this $200 million ATM offering really mean for Trilogy Metals Inc. and its investors? On one hand, this shows a company that is proactive in managing its finances and ensuring it has access to capital. If Trilogy Metals is indeed in a growth phase or has significant operational needs, having this funding mechanism in place is a strategic move. It allows them to raise money without the potentially disruptive process of a fixed, one-time stock offering. They can tap into the market precisely when they determine it to be most opportune. However, we also need to consider potential downsides. Increased share sales through an ATM program can dilute the ownership stake of existing shareholders. If Trilogy Metals sells a significant number of shares, each existing share will represent a smaller piece of the company, which can put downward pressure on the stock price if not managed carefully. It is like having a pizza that is being cut into more and more slices. While the pizza might be getting bigger due to growth, each slice becomes smaller. Trilogy Metals' success will depend heavily on their ability to deploy this capital effectively. Are they investing in promising projects, expanding exploration, or making strategic acquisitions? The value generated from this new funding will be the ultimate measure of its success. We need to keep an eye on their future filings to see how this money is being used and what kind of returns they are generating. In conclusion, this filing signifies Trilogy Metals Inc. its commitment to securing significant financial resources through a flexible and market-driven approach. The company is positioning itself for its future endeavors. The key will be how wisely this capital is deployed. Alright, that is our breakdown of Trilogy Metals Inc. Its latest filing, what is your take on this ATM offering and what it might mean for the company and your investments? Drop your thoughts in the comments below. If this deep dive into corporate finance was valuable, hitting that like button sends a great signal. And make sure you subscribe for more of these decoded insights. Don't forget to join our Discord community. The link is in the description. Thanks for watching. See you next time.